Everybody's hyped about the Fed's first cut of the year, but what most people aren't talking about? The stuff happening in the background, and that's where the real opportunities and risks are hiding. The Fed's move wasn't just about trimming 0.25%. The bigger question was always, what does Powell say after the cut? That's the signal investors trade on. Because here's the thing. Powell can cut rates and still sound cautious. If he strikes that hawkish tone, it spooks markets and altcoins get smoked first. Why? They're the most speculative bets in crypto. Bitcoin and Ethereum can handle turbulence. Smaller coins? They get liquidated in minutes when sentiment flips. And let's be real, valuations are stretched. Bitcoin around 117,000. Ethereum brushing against highs. The S&P, gold, and Bitcoin all hovering near records at the same time. That's rare. It also means any misstep, a hot inflation print, Powell sounding too tough, could unleash a wave of volatility across everything. Now, zoom out. Historically, when the Fed cuts rates, Bitcoin often performs well in the 3 months after. Not always, but more often than not. Average gains around 16% in those windows. That's why some analysts are throwing out wild long-term calls. Numbers like Bitcoin at 700,000 by the year 2035. They justify it by saying Bitcoin keeps converging with gold, add institutional demand and accommodative monetary policy. And suddenly, those predictions don't sound so crazy. But let's be honest, those big targets assume the Fed keeps cutting and the world avoids major shocks. Short-term swings are guaranteed. The long game is where those forecasts live. Speaking of the long game, Ethereum's got a unique edge. Treasuries built around ETH can actually earn yield through staking. Bitcoin treasuries don't have that lever. Standard Chartered even said ETH treasuries look more sustainable in the long run because yield improves their market to asset ratios. One example, BitMine holding over 2 million ETH, roughly $9 to $10 billion. Compare that to SharpLink's 800,000 ETH. That kind of balance sheet power matters. Meanwhile, let's not forget the messy parts of crypto. The Gemini Earn case is still dragging. Over 900 million in customer deposits got frozen after Genesis collapsed in 2023. The SEC and Gemini are now hammering out a settlement. If they pull it off, it could set the playbook for how regulators handle yield-bearing products moving forward. And while Gemini's fighting that battle, they also made a splash on NASDAQ. Shares priced at $28, opened at $37, and gave them a $4.4 billion valuation right out of the gate. Wall Street clearly wants regulated crypto exposure. Solana's got its own story too. Sol Strategies listed on NASDAQ, but the ride hasn't been smooth. The stock tanked 43% in the first week after listing. CEO Leah Wald says being the underdog is an advantage. Maybe. They're running validators that secure millions of SOL and directly hold over 400,000. They rebranded from Cypherpunk Holdings, dumped their Bitcoin and Animoca stakes, and went all in on Solana. High conviction, high risk. So here's the takeaway. Everyone's glued to the Fed cut itself. But the real story, it's in Powell's tone, stretched valuations, the divergence between majors and alts, Ethereum's staking advantage, the Gemini case shaping regulation, Solana firms fighting for credibility, and funds reallocating into alts. That's the stuff that decides who wins big in this cycle and who gets wrecked.